Are you on the correct track? Many people would have bought Tesla back if we had sold it earlier, but only one person was able to foresee these precise times. Are you acquainted with him? Carter Worth is his name, and we'll be seeing more of his Tesla research. Before we continue, though, don't forget to like and subscribe for more incredible Tesla stock news. Initially, he declared with confidence that the price of Tesla shares was about $240. The timing appeared perfect, but be careful he quickly changed course and advised purchasing Tesla stock at a price of about $110. What an exciting ride. All of us were intrigued by his market projections. However, things went south right when we believed he had everything worked out. The stock fell precipitously, as though reacting to the exuberant surge of the prior quarter. It resembled an equal, opposite, and reciprocal action. After such disappointments, we started to question why we had invested in Tesla. For the previous 2 months, investors have been purchasing the stock between $180 and $210, only to watch it plummet to a startling $165. The stock seemed to be struggling to turn a profit, entangling investors' money and making them doubt that it would ever rise higher. What use does investing in Tesla now that you've had such a setback, you ask? It's a legitimate question, and we were all looking forward to hearing the response. You won't want to miss this, I assure you. Enter Carter Worth, the famed chart master who revealed something astounding. Despite the recent dip, he maintained that Tesla shares were ready to enter a high gear. He claimed that the stock had dropped to a level never witnessed since its initial public offering. It was almost too good to be true. The way things were looking. What a wild gamble. The worst part is that Carter Worth correctly forecast the 2019 Tesla stock bottom, which occurred at just $13 a share. Is that really true? It appeared that he had a gift for timing. In less than a week, he increased the size of his investment and purchased additional shares. And what do you know? Tesla's stock began to rise sharply, rising by an astounding 15% as investors began to pour money back into the company. Let's go ahead and jump to the present. What is Carter Worth seeing right now in the charts? Despite some short-term profits, he strongly asserts that the larger picture shows the possibility for further growth, and he feels that the chance to invest in Tesla hasn't passed yet. He even goes so far as to say that people who make decisions based only on the near term may later come to regret them as Tesla achieves greater success. Indeed, there are others who contend that the moment has passed in that. It is too late to board the Tesla train. The stock has increased by more than 10 times since 2019, despite occasional ups and downs. Even now, it has risen 10 times from its modest origins. Find a midway place, says Worth, and avoid the temptation of believing the chance has passed you by. Take a portion of the profits from your current successes and let the remaining funds grow and provide dividends in the future. Recall that the market is erratic, as evidenced by this bizarre trip through the highs and lows of Tesla stock. Gains in the short term could be alluring, but the big picture is what really counts. Be not one of those people who, in 2030, are thinking back and wondering what may have been. Accept the thrills, dangers, and possible gains that come with investing in Tesla. But using this method will not allow you to benefit from compound interest, which means that your gains will be much less than what you could have made. Among the reasons actively managed funds frequently underperform the market is this. If they cut their winners too soon, they lose out on significant growth. Let's examine a clear illustration in more detail: Cathie Wood's obsession with Tesla shares. Cathie Wood has always loved the role of Tesla. However, ARK Invest, her fund, yielded an astounding 4.44% return. My Taiwanese-Canadian wife would think the fund was cursed if I showed her the number. Since the number 4 sounds like the word die in Chinese, it might be very unsettling to see triple death in the performance figure. Despite Cathie Wood's perceptive comments regarding Tesla, the stock experienced a 741% increase while ARK Invest experienced losses in the same time frame. The reason for this result is that winners were removed too soon. Carter continued saying, in the stock market, anything is possible, but in my experience, price targets that are too high lose credibility. People often ask me about my optimism when I publish comments for families, hedge fund managers, or pension plans. That's why I aim for price goals that are just beyond the realm of possible, but yet extend the borders of imagination. For example, a stock may treble from its current price. Dan might be imagining $60, but it could be an anomaly. This scenario demonstrates why, when it comes to price goals, it's critical to not rely too heavily on hedge fund managers and analysts. Rather than basing their decisions on objective fact, they frequently make alterations to appease their audience. They can adjust for a greater price objective if that is your preference. They can change the price to reflect your preference. Regrettably, this strategy puts pleasing the public ahead of outperforming the market. To be sure, not every analyst or manager of hedge funds can say this. Dan Nathan acknowledges that many people do, in fact, behave in this way. This method isn't based in reality or truth, even though it has nothing intrinsically wrong with it. Rather, it accommodates the boundaries of one's creativity. It is simple to establish lower expectations if you've never seen the stock double or even increase tenfold in a short period of time. The long-standing mystery of fossil diving has gone unexplained for millennia, causing many people to think it's an impossible task. Friends, such thinking will only serve to restrict our potential. It doesn't always follow that electric vehicles are impractical just because no one has tried them previously. Recall that breaking the rules frequently results in innovative ideas. Let's go to the core of the issue now. It's critical to distinguish between discussing Tesla's accomplishments in terms of its stock price alone and going further into its margins and cost-cutting initiatives. Do we only focus on the technical components of trading stocks? Friends, this sell-off that just happened is the exact opposite of what happened the prior 2 years. Our stock appears to be unpopular with analysts who frequently raise their price targets for it. And what do you know? The stock continues to rise, reaching ever higher altitudes. But allow me to dwell for a moment on a very remarkable epiphany. My dear managers, the organizations with the highest multiples are frequently those that are still in the process of not making significant profits. It's the field of technology and biotech stocks that are still losing money. It's all about hopes and dreams you see and the boundless potential they hold. But dreams alone will no longer suffice when you start making automobiles, making actual margins, and making noticeable profits. It's time to accept the truth. This is when the interesting part starts. Let's say we have the courage to transfer it to the actual world. In that scenario, there's a chance, possibly even a good chance, that profits will temporarily decline. You might wonder how. Tesla may choose to lower prices even further, which would deliberately affect its short-term profitability. Friends, here's the twist. If earnings decline, the stock's multiple might potentially soar. It seems counterintuitive, doesn't it? But this crazy has a purpose, I promise you. But first, let's take a quick detour and investigate the world of dreams. Tesla still has a ton of dreams to offer, my dear investor. I firmly think that many of them will come to pass. The Cybertruck is one that sticks out and seems to be calling from the distance. It is the pinnacle of driving in the future. Furthermore, even though some investors may no longer have complete faith in self-driving cars, this is exactly what makes us stronger. The lack of an assigned valuation for that particular area of Tesla's business has resulted in a decrease in the stock price. And that, my friends, is your chance to get more shares at a discount. But there's still more. With its entry into the dojo, Tesla's energy storage company has a lot of promise. During the most recent earnings call, Elon Musk himself hinted that there might be a multi-hundred-billion-dollar potential. Though it's a long shot, let's not rule it out completely. Who knows, maybe Dojo's price alone will one day surpass Tesla's current value. Speaking of fantasies coming true, the next generation car is ready with its promises of affordability and unrivaled values. This is not a pipe dream, my friends. It is unavoidable. That's it, ladies and gents. It's been quite the roller coaster ride to witness the highs and lows of Tesla stock. We've seen the market's erratic behavior, from Carter Worth's audacious forecasts to the price's extreme swings. Still, there's a ray of optimism amid the gloom. Despite recent losses, Chartmaster Carter Worth believes Tesla has the capacity to accelerate. He thinks that the historical low point of the stock could be a catalyst for extraordinary development. We are grateful that you could come along on this exciting tour around the Tesla stock market. Remember to like and subscribe for more incredible news about Tesla stocks. And happy investing as always.